Hi everyone and welcome to Inderes TV. Today we're going to talk about Tokmanni with Analyst Olli Vilppo. Welcome.
Thank you.
There's been some months and we talked about it last time and they reported last week, and we also had interesting news about DollarStore. But if you start with the Q2, what were the highlights or how would you summarize it?
It went pretty much as we expected. So the revenues were up 4% and the gross margin was really strong as like we anticipated, the purchase prices from the Far East have come down and started to come down, and also the freight prices went down because they had the better like agreement starting from April, and also they have built their own distribution center, the extra part for it, and they have taken the first leg into the use, so that takes a little bit the costs down. And also like now when the market is really like price consciousness, the customers think about prices. The Tokmanni own private labels were selling really well.
And they have bigger margins.
Yeah, they have bigger margin and they're cheaper for the customers. So it was record high that it was 33% of the sales was these private labels.
So that was kind of one of the drivers for the profitability going up.
Yeah, and last year the garden was pretty bad because the spring was late, but this year the season started on time, so that also supported the sales and gross margin. But then the Tokmanni's own costs were a little bit higher than we anticipated, but in the comparable EBIT it was 28.5 million and we estimated 28.6 million, so it was pretty accurate how they performed. And also it was really good that the comparable EBIT started to grow.
Yeah, go in a better direction.
Yes.
Yeah, what are the drivers behind this one?
Well, the gross margin was the gross margin getting better. It's the biggest driver, and it's because the comparison period was kind of tough because the prices were higher when you purchased it, and then you couldn't lift the prices when Tokmanni customers want the cheap prices. But now they have lifted steadily the prices. Like they told that the volumes were down now 3% and their revenue growth was 4%. So that the market prices for the customers have risen for 7%, and now the purchase prices are going down again. So they get better margin in the middle.
Yeah,
because they always track how much the prices are with the competitions, and because the competitors are not so effective, they couldn't lower the price. So Tokmanni doesn't have to lower the price either. So they are tracking the competition, and maybe at some point they are also lowering the customer prices, but at least not yet.
So they have kind of room to move the prices as well. Okay, interesting. But how do you see the customer behavior? The numbers of customers is a slight downtrend, but the average purchase per customer is kind of up. But that was due to the higher prices, or what is the driving forces behind this one?
Yeah, it's the inflation.
Yeah.
Like I mentioned that it was like 7% about the price increase, so the volumes were down still.
Yeah.
But it was a little bit surprising that the customer traffic was also down.
Yeah.
But because in Q1 it was up. But I think it was explained because now people were traveling more, and usually when people spend time in the summer cottage, they visit Tokmanni because Tokmanni is usually the only shop to visit in these smaller locations where people have summer cottages. So So the like-for-like in total was 1% up. So it was pretty close what we...
But still kind of driven by the gardening stuff. And how do you see the year going forward?
Well, the market is still tough. Like the buying power of the customers is not getting better, but it's not getting much worse anymore. Like the last year's trend was the buying power was always going down, like last 12 months. But now people got some salary increases and the inflation seems to go down. So that's good for Tokmanni.
Yeah. And last time we talked, there were about 200 stores. Did they open it? What's the number now?
It's 200 now.
Yeah. But then let's move on to the exciting news about DollarStore.
Yeah.
Tell me more.
Well, they announced it in July.
Yeah.
And I was on the holidays, so so I was like, my first reaction was like, I was talking to the management in the autumn, and I was asking that which change do you benchmark, and DollarStore was one they mentioned.
Yeah, and I think we talked about it in our last video as well, where we also mentioned what are the possibilities for growth when it kind of, where do you open new stores in Finland, and this came like kaboom.
Yeah, and it's pretty like similar concept than Tokmanni, and Tokmanni management has been visiting the DollarStores to get ideas, and so it seems like a really good fit because they can combine the purchases, and the DollarStore is like a smaller chain, and they don't have their like direct purchasing from the Asia. They have used this wholesale partners to buy the products. So
here Tokmanni really comes in with something too.
Yeah, and there's good synergies. Like they estimated at least 50 million.
Okay, sounds interesting. And Swedish customers can be prepared for even smaller prices going forward, or what do you think?
Well, I'm not sure if they are lowering the prices, but they are like making it more effective and combining the assortments, so they get more volumes. And because the DollarStore has made only like 4% EBIT margin, and Tokmanni over 7%. So with the synergies, we like estimate that the DollarStore would also make in 2025 or 26 this 7% EBIT. So they could be in par with Tokmanni's levels. And the purchase price was pretty high, but with the synergies.
What do we know about the purchase price?
It was 170 million euros.
Okay.
And it was financed by debt.
Okay.
So the debt leverage of Tokmanni is now like net debt EBITDA with this pro forma numbers. It's 3.5, and the target is to keep it lower than 3.2.
Yeah.
But this Tokmanni and also DollarStore, they have a good cash flow. So according to our estimates, in the end of the 2024, it would lower under the 3.2 barrier. So we don't expect any major impact to dividends or on anything. So it's because the cash flow is so good, you can pay it pretty fast.
Yeah. So what do we know about DollarStore? Have you been looking at the figures, and are they even public? And what do you know? Let's begin with how many stores do they have in Sweden and something in Denmark as well?
Yeah, they have 130 stores in Sweden and 2 in Denmark.
So all in all, it's a kind of big network going forward.
Yeah, it's big network, and there is a lot of white spots to grow even further. If you think that in Finland Tokmanni has 200, so Sweden should fit at least 200 because it's a bigger market. And because last time we talked that Tokmanni doesn't have so much growth potential, the growth avenue anymore in Finland. So now it has like in Sweden and Denmark and
room to grow.
And Sweden would have been really tough market to enter with organic openings, because they are like the management told that there is world class concepts. So it's hard to like tackle them. But when they now bought the DollarStore, they have this growth platform there.
So will they be growing as DollarStores with a separate brand in Sweden, or will the Tokmanni brand go over to?
Yeah, they will remain with the DollarStore because it's a known brand.
Yeah. So what do we know about the figures? This isn't listed, and tell me everything you know.
Yeah, you can get the financial statements in this alla bolag, but the last one is from the 2021. So there I read the balance sheet and all of the other stuff. But when Tokmanni bought the DollarStore, they told the last year's figures, and it has been growing really nicely with the store openings, but the EBIT margin has been like 4%, so pretty low. And they told in our financial call with the Q2 results that they didn't tell the figures of DollarStore this year, but they told that the growth has been good and the profitability is stable, but they will tell the exact numbers in Q3. But
so until then, we just have to kind of trust the process and the figures.
So we can make the estimates more accurate in Q3. But they told that last year DollarStore had problems with the ERP system implementation. So the last year's figures were not so strong as they should have. And that has like supported growth now this year, because now the problems are over. But it seems that we estimated that it's growing, but the EBIT wouldn't grow as much this year. But we see in the Q3 and when the synergies start to kick in, then the like the cash flow starts to be much better.
So how should investors look at the numbers and the estimates at the moment?
Yeah, now they include the DollarStore. We added them in our last analysis, but
I will put the link below so you can look at it.
Yes, but like we will make them more accurate when we get the exact numbers from the DollarStore. But Tokmanni gave the guidance, like the EBIT will be this year between 90 to 110 million euros.
Yeah.
And that includes the DollarStore, and our estimates are in 99, so in the middle. So that's like a pretty I believe that's pretty accurate how it will.
Yeah. So if I read you correctly, you see a lot of possibilities and also growth and the synergies as well. One question: where do you think ClickShoes fit into this picture? That was also a question from our forum, because if you think about DollarStore and Tokmanni, they are kind of, really cheap products, and ClickShoes also has some better kind of more not high-end brands, but better brands. And as I understand, it's quite a small part of the revenue still. But how do you see the potential going forward?
The management seemed really happy.
Okay. Yeah.
They had this first pilot Tokmanni that they brought the ClickShoes products in Porvoo. And
under the same roof as a Tokmanni store. Yeah.
And they have sold really well. So it seems like the Tokmanni customers who appreciate cheap prices also appreciate these ClickShoes brands.
Quality brands like Riker and Bugatti.
Yes, and Tokmanni is the second biggest retailer of clothes in
Which
Finland.
Is really interesting. It says something about our taste in clothes.
And they have the large customer base, so it's easy to bring out good products.
And did you get any more information? Was this concept implemented in Sweden and Denmark as well, or what do you think going forward?
But the management told that they are like bringing some products to Sweden and some products from Sweden to Finland. So I believe that maybe Click Shoes could be also brought to DollarStores.
Part of that experiment. As a customer, I mean, looking for cheap prices, this sounds interesting for everyone, I think, in Sweden and Denmark and Finland. But if you look at the, risks, international acquisitions always, there's a lot of good news here, but do you see any risks in this concept?
Yeah, I guess the biggest risk is that the purchase price was pretty high.
Yeah.
So there is not so much safety margin.
Mm-hmm.
Usually when you buy something, then you try to keep the synergies yourself and have the lower purchase price. So you get that synergies, and that's like extra profits for you. But when Tokmanni bought the DollarStore, without the synergies, the price is really high. But with the synergies, it's kind of like affordable.
Yeah.
So the synergies have to realize in order it to be a good purchase.
Mm-hmm.
And also, like always when you buy something in another country, you are maybe not so familiar what you are buying, and the seller always knows what they are selling.
Yeah.
So I hope there is not any surprises. Everything looks at this point very, very good, but always whereas there is this kind of international acquisition, we are a little bit skeptic that what could go wrong. We don't see any problems now, but we will have a better visibility when time
will tell. Yeah. Hidden risks, but also a lot of possibilities.
Yeah. So
as an investor, how should you look at the valuation at the moment? Or tell me more about how you see it.
It's the multiples are still pretty low.
Mm-hmm.
So this year the price to earnings ratio was 13, and when you look at the 2025 price to earnings ratio, it was only 9, because then there is the synergies realized from the DollarStore, and also now the growth avenue is better because now you can open new stores in Sweden and Denmark, and 75% of the global growth of these variety discount stores concepts comes from the store opening still.
Yeah.
So now it's more believable, the growth motor, the growth engine is more believable because Tokmanni knows how to open new stores when they have space to open them.
Yeah.
So now we estimate that this year our EBIT estimate was 99 million, and 2025 140 million when the synergies more or less came through. So this is like a good because the profit increase will also like drive the stock. So if they will come through, that the EBIT will be 140 in 2025. It's a good investment because
and a clear upside.
Yeah, and if we look at the DCF model, the cash flow model, it tells that the right value is 16.4 euros, but then the synergies have to come through, and now we have the target price 14.5 euros and accumulate recommendations. So we see still the risk reward ratio is still favorable, and we wanted to accumulate the stock, but it's not dirty cheap, but it's still the synergies should be really straightforward.
Yeah.
Because it comes from the purchases and bigger volumes and sharing the private labels and direct sourcing from Asia. So
yeah,
they seemed really believable. But I think Tokmanni will have a CMD in the end of the year. Or they haven't announced when, but I think they are going to then
tell more about the strategy going forward as well. Yeah. So to conclude, not dirty cheap, as you said, but a lot of upside potential. Yeah. Thank you, Olli Vilppo, so much for all your comments, and you can read the research link below.
Thank you.